Okay, why corporate governance? Again, from a shareholder perspective, we need to look at what motivates, what is the ambition. So this becomes, I would say, the circumstances at which the company is in, right? What is the ambition of the promoter, the executive management team, etc. Avarice is greed. Sometimes short-term greed drives companies and the promoters or the executive management team. And so this is a motivation, especially you will see with very aggressive professional CEOs also. They have to be, they are sometimes driven by greed. So to that extent, the independent directors or the directors need to think whether they need to hold back some of the ambitions of the company, right? I mean, this was a discussion that I had with the chairperson of GMR, for example. GMR Group, I said, uh, why did, good assets, etc. But you as a chairperson, what did you do? I mean, there was no risk management in the company. I mean, at the end of the day, the absolute ambition of the promoter is sort of not held back in or held in check. Risk management is what? Why do we have a brake in our cars, for example? That is, in fact, brake is not to stop the car. It is to ensure that we can go faster, but in a very manner that we know that we have a brake and we can hold back whenever we want to, right? Actually, a brake allows us to go as fast as we can in a very controlled manner. That's what risk management is. I think that's where the board members missed out, that holding back the promoters. Apathy, of course, this is very, very predominant in one class of companies. I'm sure you guys can think of the class of companies. I'll discuss that in the next slide. But think about it. Which class of companies displays total apathy to the concerns of shareholders or to shareholder return? That is very clear, right? That is very easy to figure out also. So safeguarding interests of minority shareholders, I would say this is the amalgam, or these are the various, I would say, categories of stakeholders which safeguard the interests. At one end, there is independent directors which are on the board who are sort of have a responsibility towards minority shareholders, and of course need to ensure that that the promoter actions are at least not against the interests of minority shareholders. Next is the institutional investors. Increasingly now, institutional investors are voting, and this SEBI, thanks to SEBI, now IRDA, etc., they have Indian corporates have had to adopt. Indian institutional investors have had to adopt, I would say, stewardship code. They are supposed to act on behalf of their unit holders, not on behalf of their investee companies. So, domestic mutual funds, when we started in 2010, they did not even vote. And subsequently, when SEBI kept on pushing them to vote, they were voting almost 80%, 85% of this one were abstain. They would abstain from voting. So there is for, against, and abstain. So they would abstain from voting. Now SEBI has made it mandatory that there is no concept of abstain. You as domestic mutual funds need to either vote for or against. There is no abstain. So this has put more pressure on domestic mutual funds to go and vote for all the proposals that are placed in front of shareholders. And that means that the institutional investors have to start thinking on each of the proposals that comes their way. And that is the role that the proxy advisory firms make in terms of, I would say, recommending to institutional investors on how they should vote. Okay, the regulators, of course, SEBI, IRDA, PFRDA, etc., various regulators, but they also, of course, have pushed, brought in new regulations, that continuous changes of regulations to ensure that the interests of minority shareholders are protected. In fact, just 2 weeks ago, again, SEBI has come out with a slew of changes which protect the interests of minority shareholders. And of course, the environment is dynamic, so regulators also need to be very dynamic. New age companies, Paytm, Zomatos of the world, etc., etc. How do you safeguard the interest of minority shareholders? What should regulators also consider? They keep thinking about it, and they need to arrive at solution. This keeps happening because in new age companies, what is the concern? The concern is there is no concept of promoter. Many of these companies are promoterless. Two is the founders of the company, in that sense, the MD of the company have only 2%, 5% shares. Okay, today Vijay Shekhar Sharma of Paytm has only 9.9% or so shares. Dipinder Goyal of Zomato has some 5% or 4% shares. The bulk of the shares is held by the private equity firms which funded these companies, and so their motivations are completely different. And so we need to, as minority shareholders or institutional investors, look at it from a different lens. Regulators also have their this one of challenges to address there. So these are the corporate governance traits that we see. Different categories have different traits. Government-owned companies. This is the public sector companies. As we saw, apathy, as many of you would have already known, the circle of apathy that we talked about here predominantly belongs to, I would say, government-owned companies. These companies don't care or do not so much act in the interest of shareholders, though the biggest shareholder, ironically, happens to be the government itself. But because these companies are not so investor friendly and focused towards creating shareholder wealth, it comes at the cost of wealth of the government itself. Okay, and that's where if you see the PE multiples, the ROEs, etc., of these companies, the public sector companies are woeful, right? In fact, it's sort of almost a disservice to the Indian taxpayer when the government disinvests or comes out with OFFs, offer for sale, of even 2%, 5% of companies at PE multiples, which are, I would say, very, very low. And whereas if they really work towards enhancing just the the multiples or the way these companies are governed, the valuations of these companies would be much, much higher, and the governments could then sell off part of the shares to fund its own coffers and benefit the taxpayers, right? Promoter-owned companies, these are, of course, promoter-started or promoter-owned companies, Tata, Birlas, Reliance, Infosys of the world, of course, now a lot of other pharma, Sun Pharma to Dr. Reddy's to everything, promoter-owned companies. These companies also have their own set of challenges, right? At one end, you have related party transactions. Some of these companies have promoters having their own private limited companies or taking cash out from the company in various means. Compensation is an issue. If you look at year after year, we have commented on compensation of companies like Apollo Tires, Sun TV, Apollo Hospitals, etc., where the promoters take compensation which is completely out of the ballpark of any other peer in those sectors or even the professionals that could take. So the promoters take compensation which are completely out of the ballpark, right? And India listed subsidiaries of multinational, we have this notion that these India listed subsidiaries of multinationals or the MNCs listed on Indian stock exchanges are, we treat them as gods. But unfortunately, this is not the case across all the MNCs listed in India. In fact, to the extent that even the large companies once in a while screw the minority shareholders. And I'll take the names of Siemens, for example, when they, I would say, merged some 100% subsidiary into the India listed company. They did it at valuations which were not, I would say, in line with the listed company's valuation. So they did it. They obviously overvalued their 100% shares, and then they got more percentage. On the contrary, when they sold off their medical healthcare division to and moved it to a 100% sub, they did it at valuations which were much, much lower. So these are pushbacks from companies this one. Then there is the issue. I mean, we had though we have not commented or we have not had this one. A couple of years ago, Novartis is a listed Indian company, but Novartis, if you see, is one of the world's largest, or probably the largest pharma company, right? But yet the India company is completely in doldrums. The India listed company is completely in doldrums. What is happening? Novartis has another 100% subsidiary in India, probably sharing the same resources. In fact, the MD of the India listed company is also the MD of the other listed company. And as we saw before, the MD or executive director is supposed to devote 100% of time to one company. So that meant, what that meant is shareholders of this listed company are sort of subsidizing the compensation for the unlisted company. And for all we know, we don't know how much of resources is going there to the unlisted company. All the new launches are happening in the unlisted company. New pharma drug launches are happening in the unlisted company, etc. So that's where you will see that a Novartis listed company in India is not held in high regard. There is no institutional shareholding and of merit. I think that's a company that is screwed from this perspective. So India listed subsidiary of MNCs has this issue. We'll quickly look into another case of how this happened. Banks, of course, have multiple, again, there are private, public sector banks, private sector banks. Banks are also governed by the RBI, right? I mean, so to that extent, there is RBI, which also puts its own foot. The Banking Regulation Act, in fact, just earlier this week, we had a discussion in the FICCI with the Department of Financial Services Secretary, that there should be unification of regulation between RBI and SEBI. Because RBI puts its foot down on appointment of directors, on appointment of tenure of directors, etc. So that is something that is slightly this one.